Hey, thank you, Scott. Hey, Andy. Hey, everybody.
Hey, Steve. Hi, Scott. Hi, everybody.
I like that, Scott Coyne. It's Trade of the Week Tuesday. Indeed, it is.
Mhm.
Hello, you regulars, Bill and David, Joe. All right, so let's get started as people file in for this semi-weekly Trade of the Week webinar. Um, yeah, just a reminder, Andy and myself have been trading our own accounts for a very long time, and we've been working for Trade Ideas for about 6-7 years now. So we have our opinions, and when we give our opinions here on these webinars, they're strictly our opinions. They're not trade ideas. They're certainly not financial advice. If you need that, you got to go seek out the people who charge you a fee to give you that advice. We recognize that trade ideas. I talked to a user today who's brand new, and he just wanted to dive all in. And he said, "God, I realized this is going to take me a few days to just digest all of the features and the options." And he's correct. And I told him, yes. And please, by all means, we help you guys shorten your learning curve every single day, primarily in Barry's room from bell to bell. But this one goes out to you, Guillermo. I saw your question. I want to remind you and everybody else that every day at 12 Eastern and 3:30 Eastern, our YouTube live stream, which I'm going to click to right now. There we go. You follow this URL here, it directs you to those two times. Again, noon and 3:30 Eastern. The traders are in there waiting for your questions. So Guillermo or people like that who want maybe get a little bit more personalized attention and help get set up and configuration with what they want to see. That's why we have those two daily 1-hour sessions for you guys. So hopefully we'll see you, anybody else that wants to come and get some individual help. That's what those two time frames are really designed for. All right, we got some new stuff coming in 2022. Matter of fact, I'm just going to go ahead and say it right now because the CTO said it today in our meeting. And when they say it, the developers, and they put a date on it, I'm gonna announce it. For everybody out there who has been waiting for trade ideas to open up earlier in the AM pre-market and go later in the post-market, your wish is going to come true within a few weeks. Okay, the server architecture technology has been changed, and Brad Williams told us all today that good new fresh pre-market hours are coming. So I want to tease you guys with a little bit of that. So also, stock racing is something that we're pointing towards to help visualization of data, and keep an eye out for more good ways. We're going to demonstrate on how to use that. We have a couple of ebooks, and this one was written by Dave Mabe. He's our Chief Technology Officer now, and he's been around for a long time. He's seen a lot of things like Andy and myself, and he's got a nice ebook you can download free there at that URL below. All right, as people continue to file in here, just want to remind you that every week is the same theme with me. The human and the machine combined, whether it's AI or robots or whatever. They don't do that well on their own. They need a human component to really make it work for them. And I'm going to show you a little, hang on, Scott. I'm going to show you a little bit of an example on that in a moment. But just remember that Trade Ideas is offering the machine, the technology, but no human is better than a machine, and no machine is better than a human with a machine. So it's a symbiotic relationship. We try to remind everybody and point that out each and every week. All right, so let's get started. Some things we want to talk about. Okay, good, Guillermo. I'm glad that resonates. These afternoon webinars, as you see, are a bit more content-driven, things that we want to talk about. So I'll go through the market recap, lots to talk about there. Andy's got the AI recap. We got literally 3 trade of the weeks we can talk about this week and learn from. I have a new scan I'm actually really excited about. It's going to make my my default layout for good. It replaced another scan, so I'm going to share that and talk about that with you guys. An example of human and machine. Just a quick reminder, I'm going to show you something there. Then we'll finish off as we always do with chart requests, whatever you guys want to look at. We can always take 5 minutes at the end of the day to give you guys a second set of eyes on some of these charts. Let's get into the market recap. A lot has happened. A lot of damage has been done. And coincidentally, or not coincidentally, today was kind of a holding pattern after a really rough last week and a giant reversal candle yesterday. A lot of people bought that close or partly close to the close yesterday, only to be disappointed today with what we would just call literally an inside day, kind of a doji. If you don't know, tomorrow is the big day, another Fed announcement. The market seems to be really interested in what the Fed wants to do and talk about these days. So I think we're in a holding pattern until tomorrow, 2 o'clock Eastern. The Fed will come out. He'll do his tap dancing in front of a live microphone at 2:30. So there should be some volatile gyrations tomorrow. Looking at the SPY here, we could see that it was leading. It was making a new high and then just literally fell out of bed. It couldn't get back above these moving averages back here. I did participate on the downside with a little bit of TZA, which is essentially the IWM inverse, but I sold it yesterday as I saw the give back was coming. You can see how much TZA was up yesterday, and so I sold kind of midday, around 38. And I'm literally looking to reload. You see that blue line right there, you guys? That's if the IWM comes back up. Let's go back to the IWM. If that comes back up and bounces into the pocket, into the armpit, into the declining moving averages, whatever you want to call them, you can see there's my line there as well. I have created a price alert for myself, and you can bet that I'm probably going to jump back into TZA as a bearish signal. But the volatility of tomorrow is going to be interesting with the Fed discussion. It's always a volatile day when the Fed comes out. Usually a new high and a new low is printed in the same hour. NASDAQ wise, you can see NASDAQ never really went to full new highs, and they've been kind of the culprit lately. You know, I don't know if anybody's noticed, but Amazon has just been doing horrible lately. All right, maybe the inflation's kicking in over there. I don't know, but the tech stocks that were darlings 6 months ago are not so much now. Major breach of technical level here. The 200-day was given up in the NASDAQ and the Qs, which hasn't been done. I'll zoom out here in quite some time. Of course, I froze there we go. Been a long time back down here since the pandemic started that the NASDAQ has broke their, Qs have broke their 200-day moving average. So this is a significant correction. We are in correction territory. And notice the NASDAQ Qs have a little red doji spinning, whereas the S&Ps had a little green one. So still a little bit of relative weakness there in the NASDAQ. And then the small cap IWM, pretty much a flat doji on that one. So we're all in a holding pattern until tomorrow. See how the market reacts at 2 Eastern to the Fed. Don't anticipate too much volatility in the morning, as that's just what happens on a typical Fed day. But that's what we've got out there. A lot of technical damage. Again, the SPY have also broken their 200-day. They're still in the neighborhood, but technically we can see that that has not happened for a long time as well. So we're talking about some new type of price action here that we're seeing that we haven't been seeing for months on end. And I am, like I said, I'm kind of ready to pull the trigger again and reload on the short side if things do what I think they're going to do, because you just really can't recover from this very easily. I'm just looking at Apple here before I bring Andy in. Yeah, same thing over there. They're above their 200. Anyway, Andy, I know you're kind of in the same boat. Are you thinking of anything you want to add to the conversation here?
No, I've been with you, and I think a lot of people on here know that I've been long the SPXS for a while. I did cover about 60% of my position yesterday, and yeah, just the opposite. Now I had about a 1653 price on this, so I had a very good price on that. I had to take some profits, but I left some out there just in case I don't get that pull back to where I can add. But
You did have a good price.
yeah, it was a good price. But that being said, and I'm going to point out, Steve made a very very good comment about tomorrow's Fed announcement, because I think this is probably the biggest one ever, because historically over the last, say, 12, 13 years, we kind of knew what to expect. Everybody's been kicking the can. They've been kicking the can for a very long time. Well, they kind of drew the line in the sand and been sticking to their guns about what they're going to do. And they have been tapering, and they're talking about raising in March. I think it could be very dangerous tomorrow if they try to backpedal on that, and I suspect they might. But I think you got to, tomorrow, be real careful, because it could be a wild one. It could be a very wild one, regardless of which way they go, really, because I think if we kind of rally into that number, I think a lot of people are going to be expecting them to start talking a little more dovish again, which in that case could be, maybe watch out for some gold, silver moves or something like that. But all right, let me. There's not a whole lot to talk about on the.
That's the million-dollar question there, Joe. I mean, we don't really know how they're going to react tomorrow, but I suspect they're going to be on their heels, the sellers. because last week was a very different week. It's always been kind of a minor pullback and the Fed gets happy and the market gets happy again. This one it feels different. That's all I can say. So with that being said, if the Fed just missteps in any shape or form tomorrow, be careful.
Yeah, they're really between a rock and a hard place right now. And yeah, I don't know. Honestly, I really, I don't know what to expect. So I'm going to stay hedged and I'm going to be in very little stock. That's for sure. All right. And unlike Steve, I'm in GLD, have been for a few days, and actually bought some silver SLV today. So we'll see what happens. All right. God, you know what, Steve? There's just not there were only 3 trades today, but you know what? This is a good thing. This is when the market gets volatile like this. Uh, Typically, you don't want to see a whole lot of trades coming out because it's pretty crazy, and there's a reason for that. Because when we build these base scans for the AI, and then she takes them and does her magic with them, but the base stems will be built on a lot of daily patterns. Like maybe a stock consolidating for a while, and all you got to do is look at the market, and you're probably not going to see a whole lot of consolidation when you get action like we've seen lately. So only 3 trades today. The best one I think was MDRX by far. Let me take it off the aftermarket action there. And yeah, there you have it. There was your signal. Beautiful signal this morning. No pain, never went really that far below it. And you did have about 60 cents, I guess, worth of move. And then finally it did kind of roll over with the market there at the close. But still, that's a nice little no pain trade where you could have had some nice alpha to the upside before it gave back a good portion of that. The other 2, they both had potential, and actually this one basically just went sideways. It didn't get anywhere near the stop, and let's just call this for what it is. It's just kind of a scratch trade. Just nothing really happened in that. And the same thing can be said about CKP. This one did get closer to the stop, and then you got a nice little pop. If you were able to hold on to through that mess, you would have got a nice little pop. But as Jamie would say, you had to take those cookies early, or it was right back down. So, Steve, just not a whole lot to talk about. I think that MDRX was a very nice call, but maybe let's see why the MDRX was a nice call and these other 2 weren't. And I would take a look at the daily. What do you see here on the daily? Well, you have a breakout. Just opened up. Looks like it may have actually opened up and then went and drove down. But anyway, you still on the daily, you had a break of this range. And so you really didn't have any resistance going higher. Whereas if you look at these, nice little gap ups. This one wasn't bad actually, but that's an ugly looking chart to try to play there. Not bad, but this one, yeah, it had a lot to get through. Still in an ugly downtrend on that one right there. So just nothing to be had there. But Steve, I'm going to shoot it back to you, man. That's about it.
All right. Yeah, not much over there, maybe even a little directional bias. The AI was doing lots of shorting last week, but not this week, yesterday and today.
That's a good point.
All right. Would be back to my screen. All right, so let's open up the daily chart here for a second. I'm actually going to go back 3 weeks because when we started talking about BTU trade of the week 3 weeks ago, it hadn't run yet. So we were still looking like this, maybe even like this. And I said, I still think this thing has a chance, guys. When we left the webinar, I said this thing is consolidating nicely. It's probably something like that. But we got our move, I think, on Wednesday of that week. And typical, you get a couple days, maybe 2 or 3 days at the most. Nice gap up here, nice blow off high there. So 3 or 4 days of good movement coming out of that congestion. And like I've said many times lately, in the swing trading realm, if you don't get out and take your profits quickly, it's very hard to get stocks to move in one direction for more than 3 or 4 days, if that. I mean, I'm almost down to a day and a half now on some of these things. So took our eye off it. No new trade of the week came in last week. We'll talk about that next. BTU sold off in a wicked fashion. Down broke its 200-day, which it actually held back here. So, last week was a difficult week for a lot of stocks. There was really nothing that was safe. Nothing, not that I could recall. So that was BTU, which brings us to last week's, which is unfortunate because it was another one of those little tickle and runs. All right, so here was our love Southwest Airlines flagging nicely. And you guys remember I talked a lot in the weeks prior about this declining 50-day moving average and how we really wanted to start waiting for these things to get above their declining 50, build a base camp, and have a chance to move higher. Well, Love never had a chance to move higher because last week the sell-off came right after a little tickle trigger right there. But in the email, the risk management was to not let, and I say this a lot in the risk management portion, do not let the price close below a significant moving average. And in this case, it was the 50. So we had a really nice, kind of a clean look here. Not too much risk, but could have been some good reward if the market had participated, but very tight stop. Again, there's that blue line, the 50. And then that is technically, I mean to say, a close below the 50. And usually that portends to worse prices. We still haven't gotten above the 50. So that's my early warning system. I use it on my 15-minute chart, on the 10 SMA, and I will use it on the daily charts using the 10, 20, and 50 sometimes. That was last week. This week, going into the weekend, we had a rough week. Very rough week, but we noticed that midweek gold miners had a really nice day. This day caught my attention big time. And I actually was long some down here and I added some on the day. So I'm still positioned in GDX. I think that might be one of the safe havens that we could look forward to if things get bad. But going into the weekend, that was kind of a sector top-down approach, okay? Everything was taken to the woodshed last week. Just a quick reminder of what we were looking at last week, okay? I really wanted to call cash is your trade of the week. I've been known to do that because cash can be a position when things aren't working, and a penny saved is a penny earned, especially when we have a close like that was very nasty. But I had faith that the sector gold miners was going to do okay this week if things continued, and we want to try and call something. Can't just opt out because you don't see anything. So what I did was I went to the bellwethers of the gold miners. Newmont Mining, I'm just going to go right to it. That was the bellwether. Newmont is really one of the few, if only, big name mining stocks that I noticed. Here was that big day in the gold miners. But more importantly, look at this flat 200-day moving average. We've been talking a lot about that 200-day moving average in the bigger picture of the markets. We've got the markets closing down underneath the 200-day moving average, whereas a defensive sector like gold miners in the bellwether gold standard, no pun intended, Newmont, breaking above its 200 and holding above its 200-day moving average. So that's the play. It was an unusual one because I'll show you. Usually I've got a trigger. Okay, this time there was no trigger. This is one of the rare occasions I've done this. Trade of the week will be live at the open at any price on Monday. It opens up to you. The entry price is up to you. I didn't know if this thing was going to gap and go crazy or what it was going to do, but actually it gave traders a pretty good opportunity. There was what I saw on the weekend. I thought, geez, we might just gap up here and go, but no. Price open, came down, a nice big plunge on the open into the moving averages. Some good a gap fill. If somebody was on their game and said, hey, this thing just filled the gap, maybe I'll buy some here. That would have been a good entry. So the trade is very much intact. I'm pleased with the way it's working. Two nice green days, a reversal candle, which is a higher low, which seems to be pretty much a nice looking little trend there. And we got two green candles coming out of it, and today's and yesterday's price action both bounced back up and closed above the key 10 SMA. I expect good things, and tomorrow we may have a real catalyst. The Fed might say something tomorrow that just triggers the gold bugs, and we shall see. But yeah, Dave, bottoming tails. I love the bottoming tails. They really do give us the story sometimes, don't they? Look at that. So Newmont is acting hopefully true to its character here, and will give us a nice higher low to build off of there. So those were the three trade of the weeks as we play catch up on those. And see if we're missing anything here. Yeah, okay, we're good to go. All right, so we'll see if we can, keep it rolling with hopefully a decent week and another call next week. The guts of today's presentation is a new scan, okay? And I'm going to talk about the genesis. This is how trade ideas can work sometimes, okay? Again, I'm a swing trader. I'm not interested in pre-market and post-market usually. I'm not interested in scalping or 5-minute charts. But one thing that I've learned over the years is that you never want to dismiss what's called a pro gap. And pro gaps can be good for a day or two, or maybe even longer. You never know, but they're good opportunities, especially in this current market. And what got me thinking about it was Holly last week traded SoFi. And what SoFi was doing, let me back out here. We're going to go like that. Here we go. So what is a pro gap? A pro gap is something that's been suffering a horrible downtrend, but all of a sudden gaps the opposite direction, catches everybody leaning on the lifeboat in the wrong side of the boat, and you get a pro gap. I don't know why they call it pro, but that's what they call it. So we have a gap in the opposite direction, not a gap down in a downtrend, but a reversal gap up. And ideally, I might even have to use some of this on my scan, some good relative volume. I think all of them are going to have pretty good relative volume, what we're going to go over here. So what does this signify? It signifies, oops, everybody just got kind of neck whipped and they didn't see it coming. So they probably got to get out of their shorts, and the buyers see it, and there's usually news attributed to it, and they want to go long. So in this case, a day and a half, you got your pro gap up, full day, second day, look at that. It went right to the darn 50 SMA declining that I've been talking all about for the last few weeks. That was it for SoFi. And then it kind of came back, very volatile. But these are the kind of things I think that as a trader, if we can catch them on the actual day of a downtrend and a significant gap up, these could be good day trades and or maybe an overnight hold and then just get out the next day, see if they stick around. So here's my scan. It's called Pro Gaps, and don't worry, I will share it. But let's look under the hood so you guys, new and old, can understand how I configured this. So I went to the filters that I know Trade Ideas can use off the rack, and the price, no big deal. Okay, we'll come back to gap for a second. How did I find something in such a horrible downtrend? Well, here it is, change in 20 days. We're going to look back 20 days and say the minimum, these stocks all have to be down at least 12% in the last 12 days. And I can check my work right here. The price was down at least 12% from 12 to, okay, so that gives me a pretty simple filter to use for a vicious downtrend. Anything that's down 12% in 20 days is not doing that great. Moving up, the gap. Okay, so there's our downtrend. Now I want a gap, minimum 3% gap up. I could probably go higher, but you might miss things, so 3% should be good. Minimum daily average volume. I did this because, yeah, you can see things that are doing 100,000 shares today, but they might only do 10,000 shares a day coming into today. I don't like to play those. I'd like to at least play names that I know and have a decent amount of average daily trading volume. So 300,000 is the base minimum for a 5-day average. And then this, Andy, this is the little kicker that I added that I don't think you have in the scan that I gave you. I was seeing too many stocks that were coming through I'm sorry, not that one. Change from the close means they're up today, which is assumed with a gap. But position in previous day's range, this was empty. So what I wanted to make sure was there was a couple of charts in here that gapped up into yesterday's red bar. No, I don't want that. I want a gap up above a bunch of days, at least yesterday's high. So by doing 101 in the position, minimum position in yesterday's previous day's range, the price is at least 101% above the low. It basically means 100 is the high. So today we have to be at the 101st percentile of yesterday's range. We got to be above yesterday. So that weeded out a lot of the junk that I didn't want to see, which is good. So there are the settings behind it. Let's go through and look at a few of these today. MindMed, I've been watching this one for a while, and I took it off my radar because why? It's been in a disgustingly horrible downtrend. But look at this one. This one, I pulled it up today and I didn't buy it. I wish I could say I was so smart and I bought this, but what it did, it's giving me a heck of a lot more confidence now that every day I might come in here and there might be 3 or 4 names that have a chart like MindMed or SoFi last week. Downtrend, pro gap, giant volume. This thing might have a little bit more to say tomorrow. We shall see. So this one really is what I'm scanning for, a chart like this right there, and I'm glad that it made it. Smile Direct Club, another doozy. You could have ridden all day. It actually made the gap up with the minimum, and boom, nice all day rider. Very good. Let's see. Okay, looking at the next one. Notice that Holly was trading this one today. Interesting. And I like this. Look at the volume on this. What do we got there, Dave? A nice bottoming tail for you and everybody else that likes those. You got volume, you got a reversal. This thing could have some more momentum tomorrow. Now, I don't know how I would trust these things longer than a day and a half or 2 days, like I said, and we can just, all we have to do is go back and look at Sophie to see that, you know, the move was there, but you got to be quick to take those profits and always keep an eye on the daily chart where those moving averages are. STRR came out today on this. So this one is not really as interesting to me. Why? I'll tell you why. It's because this day is not up here. You know, this day is significant because it gapped above yesterday, but it's hanging out with its friends down here. No, it needs to be a significant neck snapping surprise move that nobody saw coming with a lot of space. So the point is I'm not going to try and configure this thing perfectly. I can trust my own eye and know that I go through. Hey, I like that. I like that mind med. That was interesting. CKPT, that was also interesting. We got to keep our eye out for stuff like that. Smile Direct, those top three were three pretty good trades today, none of which I took. But I'm developing the scanner and I'm developing confidence in it as a swing trader. I'm looking for something like this that I can get into in the morning and maybe hold overnight if it closes strong. Another one, so the ones here at the bottom, they're not really significantly gapping enough that I would want, but they're still meeting the parameters of that scan. Not bad in GMBL either. And notice, again, the bottoming tails. I love it when they come off the bottoming tails, like MindMed did, and even a small one there in Smile Direct Club. CP, they all had really nice bottoming tails yesterday. I'm not scanning for that, but I'm noticing it, and I'm trying to call that out so you guys see that. This is not very significant. That's not really something I'm interested in. It's not a huge bottoming tail, and it didn't gap that high above. So that's what I'm looking for you guys, and I'm happy to share this scan right now. I could add relative volume, but I don't think I would need it because these things on their own pretty much have good relative volume, except for that one that I didn't like at just a little bit less than 1.0. So let's go ahead and get you guys a copy of this. I'll drop it in the chat window shortly. Anything you want to add, or did I miss anything on that? Looks like Mike C likes it.
Yeah, it's a great scan. I wanted to ask you,
Okay.
any reason why? I'm thinking it's probably because of the volume filter. SRRA didn't appear
Yeah,
in
let's
there.
take a look. Oh, let me just type that in. I saw somebody ask for that. Okay, pro gaps, and it's in the chat window for anybody that wants the cloud link to that. So let's look that up. What was that? SRRA.
And the average volume, I think, on it is 145,000. So I bet that was
That's
probably
how
what
it
it
is.
was.
I'm locked up. I guarantee you that's what it was.
Yep.
So if let's just do one thing here real quick. We'll just go into my scan. Hold on. Go into my scan. Let's lower that to 100,000 shares, and I bet you it pops in. Still no, huh? Interesting. Okay, SRRA. Oh, average volume 3 months is 60. What is the average volume for 5 days? I wonder. Do you know? Here's how we do it, guys. Here's how we do it. So we go like this. We search in our single stock window. What were we looking for? 5-day daily average volume, show column, and it'll give us that data point. Average daily volume 5 days is 4,000.
Oh, okay, 4,000.
There you go. See, that's why I was talking earlier that I don't want to have those low float ones that are doing something today, but prior to today only do 10 or 12,000. So that's why we can't have that. So I'm going to go ahead and turn that back up to like what I like, 300,000.
Mm-hmm.
So they're at least names that we can see have a track record. All right, so there you go. That's the one that I just sent out. Joe, on the precise, what will be your rules when to take the trade? We shall see. Okay, I said we shall see. So as I go forward with this scan tomorrow, I've got a little bit more confidence. So if I see something that I'm aware of and has good volume and it opens up with a gap up, what I'm going to do is I'm going to play off. I'm either going to maybe buy a little on the open if I want to buy a little bit and watch it, but this is my play right here. As always, 10 SMA on a 15-minute chart tells me that, you know, I could be safe to get in this thing and I will stay in this thing. Here's an even better one. The SDC, okay, it gapped up, you're watching it. Here comes this 10 SMA. This is what I'm watching. Where is it in relation to the 10 SMA? It was good on the close yesterday, sold off, but here came the 10 SMA. Okay, I'll buy it. And when do I get out? I'll get out when it closes below. That one closed below, I probably would have sold right there. Or if I was hell bent on then taking that home at night, I would wait until tomorrow, engage that. And a stock like SDC, I probably would hold overnight. And my target would be this the next day, the declining 50. So there's not really much of a symbol or an event or an alarm that's going to go off that says, hey, buy it. This just gives me, Joe, an idea of what I want to watch today closely in the first 15 minutes. Okay. All right, good. Glad that resonates. So before I move on, let's see. Yeah, I was going to move on to something else. If anybody has any questions about that, again, you can let me know, but it's there. It's in the chat window. And yeah, we covered it. So what I think I want to talk about next was I did a screenshot yesterday. Yeah, new scan for pro gaps. I just want to remind people, I say it every week on the intro, man and machine, human and machine, they're not good on their own, but they're great together. And I say that always really comes into play a lot with the AI. We see that all the time. Some people come in and they want to auto trade the AI, but they don't want to really do the work. And what I mean by that is they don't want to manage the trade. It's very easy to get mad at yourself for getting out too soon, but it's much easier to blame the machine or something else for getting you out. But that's not your highest and best use of your brain and our AI. And let me show you why. This was yesterday. All right, I decided I thought I better screenshot this for tomorrow just to remind people I see this all the time. Okay, conservative profit, 93 cents. This means the AI got out of way too many good trades way too soon. We as humans can stay in these trades and create our own rules. And again, if you're new, my rule is this: is it still above the 10 SMA? Well, if this was a day trade, I would have sold it right there and I wouldn't look back. That keeps me in the game. It keeps me not looking back and regretting that I got out too soon or too late. I just wait for the momentum to die. And so if you do that as a human, you're going to have a lot better trades than you will as Holly the AI. Holly the AI gets real skittish the moment there's a little bit of a pullback. It goes into profit save mode. And we can just see over and over the data show that conservative mode is not really the highest and best setting. You've got to get yourself in the game. Moderate mode was where it was yesterday. I'm not saying get into aggressive mode. That means don't use the stops at all. But just managing the trades and letting one, the AI get you into the trade, and two, you manage the trade. You're going to do a lot better if you're using this tool to try and find trades. The value of our AI is in real time, giving you a symbol and a price and a moment to buy it. After that, the exit is just a statistical probability. We have the luxury of humans as seeing the trades develop in real time, and that's why this is such a very simple concept for me. If I'm in and I'm long, if it's a day trade, yeah, it's there. But if I'm in for day 2 or day 3 and I'm itching to get out and take my profit, this is when I take my profit. The minute it breaks below the 10 SMA. Yes, I know it went back up again, and that's okay, but I always feel good that I got out. I got the chunk of the middle, and I got the best possible price I could. You're never, ever going to be perfect. You're never going to buy perfect. You're never going to sell perfect. So just a quick, like I showed you there, a visual reminder that the AI works best in moderate mode for people using that. Sunil, what moving averages do you use for intraday and daily? Okay, so Sunil, the buying, the selling I just went over, and it's always the same. The buying can be a little different, but when I'm ready to sell for a profit, I'm going to use the 15-minute chart and a 10 simple moving average to tell me that the momentum is dying out intraday. And a lot of times on a losing trade that's not working for me, I'm going to go back to LUV, which was a trade of the week last week, when I said if it closes below the 50, I want to get out. Now, I don't typically like to get out midday because there's head fakes and wicks everywhere. But once we get to 3:55 p.m. Eastern, you should be able to look at your positions and say, this looks like how love is going to close on that day. And that would have been my out. No, it was my out. So I never look back on these because it's usually an early warning sign for me to get out. There's no real one way that I get in and one way that I get out. There's a few different ways to get in. Sometimes I'll average in, I'll buy a little bit, and I'll buy a little bit more. Classic example is my core holding of DWAC. And Andy knows I've been in since the 50 base, wrote it all the way up here, said I'm not selling any, I'm going to reload when I can. Andy knows I reloaded yesterday at the 20-day moving average. So I doubled up is what I'm trying to say. This was my initial position, saw that it's working. I believe in it, so I'm going to double up and add to it at that 20, and we'll see what happens from there. But no one trade is going to be the same every single time. My go-to indicators, as you asked, are the 10, the 20, and the 50, and the 200 will be in there shortly. But intraday, I primarily use that 10 SMA right there. And you'll see one more. The last one is this blue line. It's literally 130 periods, and 130 periods on a 15-minute chart gives you a perfect 5-day rolling average using that time perspective. So a lot of times, it's just an area of interest for me. I'll see the markets bounce up, they'll try and hold that level, and then maybe they'll fall back down. But most of my decision making is really predicated off of that 10-day and 10 simple moving average on the 15-minute chart. All right, so why don't you guys send some questions, some stock symbols in now, and we will take a look at those symbols on the way out here. Yeah, Joe and Sunil, all you do, first thing I'm gonna do is I'm gonna give you my chart and I'm gonna show you how we make those. So I can give you my chart here. It'll be in the chat window for the 15-minute, but all you do to get that blue line, that 130 line, the 5-day moving average, is go to your indicators and create a simple moving average, an SMA, and then assign that SMA 130 periods, give it a color, and you can see that's the one that I've used a lot. I don't really have a lot of great examples at the moment. Yeah, you can kind of see back here when the Qs, it was resistance there, and then it was support there, then resistance, and it just kind of gave way. So I'm always watching that that 5-day rolling average on my 15-minute charts just to kind of see where the levels of interest are.
And you got to be sure you're using a 15-minute chart.
Yes, 15. Got to be a 15. The 130 periods doesn't work on a 10 or a 5. All right. So I see Bill dropped a couple, Dave dropped one, Joe. So if you guys want to look at any charts, we'll do so now. Yeah, the banks were looking interesting a couple weeks ago back here, and then they sold off with higher interest rates. They might be doing something. Look at how this one just moved all day long up that nice 10 SMA. You also said, what was it, Wells Fargo and JP. Again, riding that momentum line all day long. Look how they found some resistance there at that 5-day moving average, and then they pushed through it. That's all I need to see is that, you dealt with it, you moved through it. Okay, that gives me another piece of information. And lastly, on the banks for Bill was what was it? Oh, Wells Fargo. I really like these bottoming tails in the banks. I think you might be onto something there. They could have something going. And then we can just look at the ETFs, the financials in general, same kind of a thing, double bottoming wicks, the KRE, the KBE, what have you.
Guys, that could be a little precursor of what may come tomorrow. Obviously,
Yeah.
if in a raising interest rate environment, banks are going to do well. So we'll see.
They're probably trying to front run it. Yeah.
Not
Okay,
really.
so back to the examples again. Look at this 130 line. Support became resistance. Today, resistance. So there's something to it. I wouldn't use it on my screen unless I thought there was something to it, but it's up to you guys to decide if you find value in it. All right, so a couple more charts here. We did those. Oxy. Huge day today for the petroleums. Here's the OIHs here on my sector board. So yeah, stocks like Oxy are all going to look like that. Honestly, the big move was yesterday and today. Now we're just running right smack into resistance again. I think if you got a good price down here and you're holding it, maybe you sell a little, maybe you could reload on a pullback. Definitely a strong sector for sure. TX, couple of nice bottoming wicks, but a lot of things look like that. The only problem is it's just still in its gap down here below all of its moving averages. Never really familiar with this one. It's American Depository Receipts for something. Okay, so let's look at some more STL after earnings. I assume they were today. Oh, okay, after earnings. Boy, look at that. How about that? Look at that 5-day moving average. Come right in and slam the lid on today's action. How about that? Daily, it held the 50, so that's the good news. A couple of good bottoming tail green candles. You're just going to have to get above the 20, which is probably right where the 5-day average and the 20 were right there, about the same spot today. All right, we'll do a few more here, then we'll bring Scott in. Somebody dropped a couple, so we'll go through these quickly. Nail's getting nailed. It's in a downtrend. I see a lot of resistance right up there at 86 on those moving averages. Macy's, oh boy, this one got crushed recently, didn't it? No, it didn't. I was thinking of something else. It got ahead of itself and it sold back off. Look at the 50-day moving average come into play on this one. 1, 2, 3 days back there and a wick today. The 50-day moving average is the nemesis there for Macy's. Sol also in a downtrend below all its moving averages. Needs to get back above that 595 level for sure. And let's see, NMDN, is that it? I could never, NMDN, I could never type that one. Oh, jeez.
NNN.
NNDM.
Yeah.
Oh, it's 2 N's. That's what threw me off. Horrible downtrend. Didn't really do much of a gap up today. I think it's just going to run right into these moving averages like it did before. Here, 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 and here. The red 20-day moving average is going to give you trouble, but it's trying. See what it does. All right. One more for Sunil, and we'll do a couple more. Another one in a downtrend. Nice bottoming tail yesterday. See if it can build on it, but it's going to run right smack into the 10-day moving average like it did here and here and here and here. So that's going to be your first hurdle, is to get above that one. All right. CF for Joe. Couple of good days. This must be oh, pesticide and agriculture, huh? Interesting.
Yeah, that's interesting. Nice looking chart there.
I forgot about them. Decent volume.
What's
too.
Mosaic doing?
Decent volume over there too as well. Kind of the same thing. Mosaic looks nice too. Nice bounce off that 50. That sector could be ripe for something. We'll see. IBM. I think they had a rough time, didn't they? Nope, they didn't. What am I thinking of?
They had
really
earnings.
Nice. Yeah, but they recovered nicely. It looks like really nice piercing bottoming tail off the 50 yesterday and a big move up today. But again, right smack into the 200-day. Yesterday and today was a great trade, but where it goes from here, I don't know. Last one for Joe, then we'll bring in Scott with any announcements. Kohl's. Yeah, they're getting bought out, aren't they? Was somebody offering?
Possible
merger
offer.
But then what happens is when you get up there, it just does this for days. It'll just do that for days. So you got to be careful with trying to jump into these things in the arbitrage game. Buyout. Yeah, thanks, Chris. All right, well, that's all we got today. Good stuff, good topics. Thanks, guys. Why does the 130 SMA work with the time frame but not the 100? Because there's 130 15-minute candles exactly in a 5-day period, Sam. That's why it fits perfectly. And I could use a 5-day on my daily chart, but being able to use that 5-day and zoom in on a 15-minute chart gives you much better perspectives. So it's kind of a little tricky workaround. Brian Shannon taught me that. All right, Scott, we're ready. You're still on mute? I'll take you off mute. There you are. Anytime you're ready, Scott. I'll go slideshow mode. When will Thinkorswim coming to your system? I am not sure. I know we linked to it, but we can't auto trade through it. Well, if Scott's not going to come through, that's okay. I'll walk us out. Just a reminder that eTrade is literally the next automated trading iteration. So we started with interactive brokers. Now we're with eTrade, and what's nice about them is zero commission. And then that, because as I said, the interactive broker. Learn more at this link down here, how we connect to interactive brokerage, auto trading, and whatnot. Happy 2022 is a promo code. Give you 15% off your first month or year. You can always use that for a month and then come back and tell us you like it. You want to use it for a year, not a problem. We'll honor that. Questions, you're best off sending any questions that didn't get answered today, or if you're watching the recording, info@trade-ideas.com is our main hub. Anything that gets sent there really becomes a support ticket, so you'll get your answers. That's the best email to get a hold of us, any of us, for any reason that you might want. All right, well, that's it. We are done, aren't we? I think we're done. Are we?
We are. Yes, we are.
Yeah, see some more slides in there. But,
yeah, sounds good. Thank you for all of that. And the recording will be up later on tonight or tomorrow morning. You get an email reminder about how to find it from us tomorrow.
Okay. Thanks.
Thanks, everyone.
See you.
Bye-bye.